doesn't play ball. So SMCI is
Finishes its investigation. Keep questioning to avoid this stock at all cost, which is systemic risk.
it's a deliberate pivot toward what they call data.
Listening, you are weighing absolute technological dominance from one buyer. I mean, that is essentially, which is insane. And they have a $40 billion forward target.
3 reasons why you should buy this stock and 1 reason why you should avoid it at all cost. Stay until the end of the video to know more.
Supermicrocomputer is, well, they're fundamentally reshaping global AI computing right now.
Yeah.
And they might just completely implode while doing it. Today, your mission is to unpack this really massive divergence.
Yeah, it's a huge split.
Right. You have this one company with just absolute technological dominance in the 2026 AI economy. But they are simultaneously carrying profound corporate governance risks. So we're going to break this down into 3 core reasons why you should buy SMCI stock, and then 1 massive reason why you should avoid it at all cost.
To grasp the bullish side, you really have to look at the physics of modern AI. That is the first reason to buy, which is their thermodynamic moat.
Okay, let's unpack this, because I'm trying to visualize it.
Right, so think about new silicon, like NVIDIA's Blackwell. It pushes rack power densities up to like 120 kilowatts. Legacy air cooling is literally physically obsolete at this point.
Yeah, because blowing chilled air across a room of Blackwell racks is, I mean, it's like trying to cool a screaming Formula One engine with a handheld paper fan. It just doesn't work. The hardware will melt.
Exactly. The air simply cannot absorb and move that thermal energy fast enough. So that's why SMCI's direct liquid cooling, or DLC, is just a hard requirement now.
They pipe fluid straight to the GPU, right?
Yeah, exactly. Instead of blowing air, DLC pipes liquid directly to a cold plate sitting on top of the silicon. It takes the heat before it ever even hits the air. And because SMCI spent 3 years vertically integrating a supply chain for those specific cold plates and coolant units.
They have a massive head start.
Oh, huge. They now command a 70 to 80% market share in liquid cooling.
Wow. And having a near monopoly on a physical necessity is what drives the second reason to buy, which is an absolute revenue explosion. I mean, fiscal Q2 2026 hit a record $12.68 billion.
123% year-over-year increase.
Which is insane. And they have a $40 billion forward target. But logically, that shouldn't even be possible. Moving thousands of $30,000 GPUs usually just shatters a standard supply chain. How are they scaling revenue that violently without breaking?
Well, it comes down to their 54-day cash conversion cycle.
Yeah.
That is what keeps the engine running. Instead of waiting on, fragmented third-party suppliers, they just manufacture the chassis, the motherboards, the cooling systems all in-house.
Oh, wow. All of it.
Yeah, they assemble the entire liquid-cooled rack, ship it out, and collect payment in under 2 months. That velocity lets them turn capital over rapidly and bring fully integrated racks to market, like 3 to 6 months faster than legacy competitors. They are churning out 6,000 racks a month.
Okay, but churning out hardware at that speed comes with a hidden cost, and you see it glaringly in their gross margins. They just posted a 6.4% margin, which is pretty scary.
Right, but management claims this is a temporary phase. It's a deliberate pivot toward what they call data center building block solutions.
Right, DCBBS.
Exactly.
Great.
They aim to sell those proprietary subsystems like the coolant units, which actually carry over 20% margins. The goal is hitting a 14 to 17% long-term equilibrium. So that is the third reason to buy the strategic margin recovery.
Okay, here's where it gets really interesting, though, because I am pretty skeptical. Isn't that 6.4% margin actually proof that massive hyperscale buyers are just squeezing them on price rather than it being a deliberate strategy?
It is a very valid skepticism. Hyperscalers buy in such enormous volumes they can dictate pricing, and they always have alternative ODM options in Taiwan if a supplier, doesn't play ball. So SMCI is absolutely trading immediate profit for volume right now.
Right, they need the ecosystem lock-in.
Exactly. By deploying the base infrastructure today, they position themselves to capture the higher margin maintenance and proprietary cooling upgrades later.
Which naturally brings us to the bear case. The one reason to avoid this stock at all cost, which is systemic risk. Because having the most advanced liquid cooling hardware in the world is utterly useless if the corporate foundation is built on sand.
Yeah, the systemic risk here is undeniable. You have active DOJ and SEC investigations over alleged accounting manipulation.
And it's not their first offense either. Weren't they delisted from the NASDAQ back in 2018 for similar issues?
They were, yeah. But what really amplifies that governance risk today is their customer concentration. In that record-breaking Q2, an unprecedented 63% of their revenue came from a single undisclosed customer.
Wait, 63% from one buyer? I mean, that is essentially a monocrop farm. It's super efficient while the weather is good, but one bad season or one canceled contract wipes out your entire harvest.
It is an incredibly fragile position for a company at the very center of the AI boom. If investigators find systemic accounting issues, or if that one massive buyer pivots to a competitor, the entire revenue model just vaporizes.
So, for you listening, you are weighing absolute technological dominance against catastrophic corporate and concentration risks. And as you evaluate that balance, here's one final thought to mull over.
Right, the geopolitical angle.
Exactly. SMCI is aggressively expanding into the Middle East to build infrastructure for sovereign AI. But recently, drone strikes have actually hit data centers in the Gulf. We are entering an era where kinetic warfare targets digital infrastructure. Could physical missiles destroy SMCI's global investments before the SEC even finishes its investigation? Keep questioning the foundation.
If you like this content and want to watch more videos like this, then don't forget to subscribe. Thanks for watching. See ya!